Hello everybody. Despite the extremely negative sentiment currently surrounding gold and the sector of precious metals, as well as their poor performance over the last 6 months in relation to other equities, I believe this sector has some great technical as well as macro factors in line that could drive gold and silver significantly higher from where they are right now. Today I will present all of these factors which gold has as an upcoming tailwind, so stay tuned. Hello everybody, welcome back to The Contrarian. For those of you who are new here, my name is Logan. I really like to talk about the markets and investing, and most of all going against the crowd. I like to say that if you can go against the crowd, if you can avoid a lot of the common mistakes out there, you will outperform the market in the long term. So if you like these kinds of topics and you get to the end of this video and you want to hear more, just consider subscribing. And I'll also make a disclaimer that this is not to be taken as personal investment advice. It's just me presenting a lot of the information I've gathered out there. So to get started, I'll get to the most obvious and straightforward reason for gold and silver to increase in price, and that is inflation and monetary supply expansion, or should I say monetary supply explosion, that has happened recently. Now, unlike gold and silver, which are naturally limited in supply, and their supply can only be increased very gradually in terms of mining, the fiat monetary system of the United States and basically any other fiat monetary system in the world has been essentially in constant increase for the last decade, or even more than that in the case of Japan. And right now it's essentially reaching the point of exponential increase, where it's always exponentially more than the previous point in time that is needing to be added. And not only is another infrastructure spending package coming out at several $1 trillion, but more rounds of stimulus are in the works. So who knows what the final bill of the COVID shutdowns will be, but this is by far the most straightforward and obvious bull signal for gold in the long term, and that is monetary supply explosion and people looking to preserve their purchasing power. And that leads into my second reason, which is shifting sentiment from currently extremely negative and bearish and skeptical to at least neutral and then optimism and gradual euphoria. And this will only begin to shift once gold and silver really begin to get going, and once people actually begin to see inflation firsthand in their everyday purchases. And most people probably are already beginning to see that, but just as that begins to increase more and more, there will be an increase in the demand to get into gold and silver and gold and silver miners, which is already sitting on very limited supply, which will increase the price even more and then shift to even more bullish sentiment. So a shift in sentiment such as what is currently going on is reason number 2. Reason number 3 is that we are heading into a prolonged period of time of negative real interest rates. Now, we already have negative real interest rates, with bonds yielding anywhere from 1 to 3% at the most. And inflation, as it currently stands, is well over 3%. In fact, Shadow Stats, a site that seeks to calculate the honest economic data in the real world, currently has inflation sitting around 9%. So let's say you have a bond yielding at best 3%, but inflation is sitting at 9%. That's a negative 6% real rate of return that we currently have in the bond market. So just wait until inflation really gets going and rates begin to go really negative. Any past period in history when gold has been legal tender, the price has skyrocketed under this circumstance of very negative real interest rates. Just look at the 1970s when consumer inflation was 15% according to the official CPI data. So it kind of makes you wonder what the real inflation rate was back then. But gold soared during this time. And why, you might ask? Well, with people being unable to get even a maintained purchasing power in bonds, a portion of them, not all of them, but a portion of them went to gold and gold miners. So the bottom line is we are currently heading for an environment very similar to this time where real rates were significantly negative for a prolonged period of time. And now I'll get on to the technical reasons to be bullish on gold. I usually put fundamental reasons and macro factors over technicals, but technicals also indicate that we are heading into a very bullish cycle for gold and silver. Looking at their charts, they both have had the past 4 to 6 months to consolidate after their move up in mid-2020, and gold especially has retraced roughly 50% of its move that it made from around 1400 up to 2100. At its top, it's found its support at around 1700 and has formed a bull flag. So why is this a good sign? Well, it shows that the quick uptrend cooled off, especially with the rise in interest rates that started roughly 3 months ago that really kept gold lower. But now with rates heading lower again, and with the stock market also picking up momentum again, gold is likely ready to get out of its period of consolidation and be potentially be one of the top gainers in the coming last rally that is currently underway. And as I've talked about in past videos with regards to David Hunter's prediction of a coming melt-up, I also share that a very similar opinion. This could be a very quick and relatively short period in which the markets cover a lot of ground, but also this would not be a prolonged bull market. It would not be something you would really want to stay in for the long term. It would be rather the last final surge of a 40-year long secular bull market, which would then reverse into a meltdown. So the bottom line is that even though there are clear signs to be optimistic about gold for the short and long term, short term being the next 6 months to a year and long term being the next 5 to 10 years, I would say that just the rest of the equity markets are likely going to have a significantly harder time in that time frame, just due to the extremely overheated market that is currently going on. And I am definitely not the only one saying that. There are many other very notable investors out there who are warning of just extreme overvaluation in the market right now. But just looking at gold and silver, I think that is kind of one area, at least right now for me, that I can be very optimistic about. So yeah, if you guys liked this video, give it a thumbs up. If you didn't like it, give it a thumbs down. Let me know why down in the comments, and I hope to see you again.